Hi everybody, it's FIBO Group and you're watching to the Market Watch Review. Strong nominal wage increases in Japan and a hawkish increase by the Reserve Bank of Australia helped both currencies recover. However, they remain within yesterday's ranges. Sterling was sold for $1.20 after the euro traded briefly below $1.07. However, the European morning is dominated by a consolidative tone. After falling $63 per ounce last week, gold has stabilized. The context of China's overall reserve growth should be considered when considering the news that China increased its gold holdings for the third consecutive month. The March WTI is now at $76 after yesterday's plunge to $72.25, a two-month low. Asian Pacific market. Japanese labor cash earnings were boosted by winter bonuses. Year over year, winter bonuses increased by almost 7.6%. The highest increase in wages since 1997 was 1.9%. Yesterday's dollar gapping higher against the Japanese yen was confined to yesterday's range. Today's gap is narrower. The Reserve Bank of Australia raised its cash target rate 25 bps to 3.35%, as was widely expected. RBA warns of more hikes in coming months. Although the RBA apparent hawkish move has helped the Aussie to recover, it is still not at the same level as yesterday. Technically, it may take a move higher than $0.7000 to raise the tone. Market of Europe. Spain and Germany reported December industrial production figures. February 15th will bring the aggregate Eurozone report. German output dropped by 3.1%. which is much higher than the 0.8% drop expected. This was in line with the expectations and the largest drop since March 2013. France was hit by rail strikes today and reported a €14.9 billion trade deficit in December. The median forecast for a deficit of $12 billion was $14.9 billion. Today's euro fell briefly below $1.07 before stabilizing today. The initial resistance is now near $1.0750. Sterling also extended yesterday's losses to trade at almost $1.1985. Market of America. The CPI and the employment report have outperformed the U.S. trade figures in terms of market reactions. Net exports contributed about 0.8 percentage point to the fourth quarter GDP. This is not likely to happen again anytime soon. A deterioration is evident in the advanced December report on merchandise trading. Canada releases its December merchandise trade balance. The surplus, which grew to almost 4.2 billion Canadian dollars in May, is now shrinking. It actually fell to a small deficit in November. Yesterday's greenback traded at CAD 1.3475 and has been trading within yesterday's range today. Options for approximately $900 million are available in the CAD 1.3480-1.3500 region. These options expire today. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.